Welcome, ladies and gentlemen, to Commodity TV and the Precious Metal Summit here in Zurich, day 2. We want to get now an update from Southern Silver Exploration. And Rob Macdonald, the CEO, is here with us.
Okay, thank you, Joachim.
Yeah, thanks for taking the time, Rob. Long time no see with all that
Yes.
Corona things and stuff in between. Gee, was quite a tough time, but market is also tough to us. But anyhow, so what's going on with your company? What happened this year? What were some highlights?
Well, what we've been doing this year and focusing on this year is that we're trying to build on the initial results from a preliminary economic assessment that we released in late 2022. That provided for quite a large mine. It was based on a resource that was 335 million silver equivalent ounces in both the indicated and the inferred categories. And now we've added some new resources where we've examined gold metallurgy to add gold into the cash flow, which is a minor component but can still be quite relevant on a year-to-year basis for annual revenues. And then there were some other things that we noted in the original PEA that we think that we can just simply improve on. And so those different features we're building into a revised estimate or revised economics, and we're looking at having that out in the January, February of next year. And so it's within the next 3 to 4 months we'll have a further update on the economics, and then we look at what we want to do after that.
Okay, super. So that means you are really in the development of the mine, I would call it, in the pre-development, of course.
Exactly.
And
yes.
Can you remind us on some numbers of the PEA, please? What sizes we are talking, what capex is needed, where do you see the costs, production annually?
Yes, the PEA called for 15-year mine life, so that's quite a bit of time. Total revenues were $3.7 billion. We had an NPV at a 5% discount of $349 million US. Internal rate of return at 18%. I think that's probably about it. Those are the main highlights.
At what metal prices was it calculated?
Now the two main commodities, the two main metals are silver and zinc, each of them accounting for about 40% of the revenues. We were using $22 silver and $1.33 zinc. So not too bad compared to spot prices.
I just wanted to say.
Not bad.
Yeah, and I think we both agree that silver prices have to rise.
Oh yes, of course. Yeah, I mean, if you follow, the silver bulls, they're seeing a lot more silver consumption in the manufacture of solar panels, and then electronics that go into all of the electric cars that everybody is building, and I think the latest that we've heard, at least for the last 2 years, there's been a deficit in silver stockpiles.
It's the fifth
consecutive. Okay, and so yes, silver, it has to go up, and it's really just a matter of time. And I mean, I'm curious as to why it hasn't, but maybe that's a different conversation.
Yeah, and I think also because I spoke yesterday, for example, with Max Silver. Yeah, they are now in production,
right?
And it's really interesting because there is nobody out there with big projects and big production. Yeah, so we really need that. So what would be your, let's say, estimated timetable when you could make it, given the fact that things go the normal way?
If things go the normal way, so we're looking at in early 2024 putting out the PEA. If we were going to start moving into a feasibility, that will probably be 2 years, for example, and then maybe another 2 years beyond that for construction and securing financing and construction. So you might be looking at 4 to 5 years time frame, for getting the project into production. And right now it looks like it would be a robust mine with 11.3 million silver equivalent ounces produced every year, just under 5 million ounces of silver produced every year. So, for even mid-tiers and even some majors, that is quite significant production and some excellent cash flow and revenues that, moving forward.
What would be a, let's say, conservative estimate in the future for the AISC when you go in production? I know it's too early, but just can you give us a bit of an idea? Are we talking more, let's say, to $15 AISC, or do you think you can bring it lower?
At this point, we're looking at $13.27, and we think that can come lower. The original PEA, we're using what we thought were very conservative electricity prices, and there's a few other factors that we think that can shrink that number. Maybe not a lot, but a little bit, and every little bit helps in these situations.
Okay, super. I saw also in your fact sheet that it's a very high grade mine, of course. Yeah. So how does it look like if you go a little bit broader? Future exploration potential, where do you see that? I mean, let's say a starting 15-year mine life is already a lot.
It's already,
yeah. But do you think you can also significantly enlarge that then?
I think so. I think there is mining potential. We've drilled as deep as 1 kilometer in certain parts of the project, and mineralization was open to depth, and in fact mineralization seemed to be transitioning into a stronger copper mineralization. It was more copper and silver with lesser zinc and lead, and this is with these types of systems, and this is a skarn deposit, this is not unusual, that you have in the upper parts of the system silver, lead, zinc mineralization, and then as you get deeper you transition into copper with silver, or possibly deeper, maybe getting into a gold enriched part of the system. In other parts, so there's in total 6 deposits that we've identified, and 3 of them on the east side. They've only been drilled down to around 450, 500 meters depth. There is no reason why that mineralization can't extend down to 1 kilometer and expand the resources further. And that may be a pathway to ultimately expand production from a 15-year mine life, maybe to a 20, maybe a 20 plus in those terms. And as I said, at 1 kilometer down, mineralization was still open. It's just a matter of drilling holes that are that length, and the cost benefit comes into play at that point.
Yeah, and I mean, when you are then in production, it's also easier to drill from underground, much cheaper.
Exactly.
And more effective.
Yes, exactly. And so the idea is to maximize what you can find near surface and get the project to a production decision and into production, and then you can continue developing resources. And that's part of the balance that we try to make. Is it more effective to add more tonnage now, or is it more effective to de-risk the project further, bring it closer to production, and then look at adding more tonnage at a later date?
Okay, super. What is cash in the bank? Are you financed for the next year?
Yes. Well, right now we're not drilling, and we have $2.5 million Canadian in the bank, and so that's enough to get us well into 2024. We of course will have the update on the PEA, which will take some money out of the treasury, and we have normal G&A, and so we think that we're good until well after the revised PEA, and so we might be looking at sometime in mid 2024, looking at an additional financing, and we hope that the market has corrected itself by that time.
Yeah, upwards, please.
Yes, upwards, exactly. Yes,
that
upwards.
Would be good. Who are your largest shareholders?
What's
management share?
Management is about 2 to 3%, and our largest shareholder is the Electrum Group. They're a private equity firm out of New York, and they were once partners in the project itself. However, we felt we wanted to move a little bit quicker than they wanted at the time. So this was in 2020. We arranged to purchase their share of the project, and that was I think a real milestone for the company, and has allowed us to chart our own path. They still remain a very supportive shareholder, around 25%, and one of their representatives is on the board of directors, and again very supportive of the work that we're doing.
Who else is from the institutional side in? Aside of
We
Electron?
have Red Cloud has helped us out with financing on a number of cases, and then a series of institutions that institutional investors that they've brought in, and that's about it. I think we're largely retail, and so we reach out to the people out there to get our story out, and that's really about it.
Fantastic, super.
Okay.
Then, thank you very much.
Excellent.
I wish you Merry Christmas, all the best, and we look forward then to your revised, upward revised, hopefully,
Yes.
PEA then.
Yes, of course. Thank you very much.
Thank you. Yeah, ladies and gentlemen, that was Rob Macdonald, the CEO of Southern Silver Exploration. Yeah, you heard it in January, February, there will be a revised PEA. That's also really interesting because I could imagine that the numbers even will be better than they were already before. And silver, zinc, copper, gold, those are the metals of choice, and they are all in there. And I must say, a starting mine life of 15 years, that is very positive. And also the numbers look really good. So really check out the company. Thanks for watching us, and bye-bye from Zurich.